Namaskar and very good morning to you all. When Principal Meena asked me to come for this conference, it was something like a call from home, and nobody says a no to a call from home, and that's why I said yes, because CAB is something like a home to me. But at that time I did not realize that events will overtake this conference which will make it impossible for me to be physically present with you. But today is the world of virtual reality. So let us make use of the virtual reality to be with you without being physically present. This could have perhaps been done through a video conferencing also, where we could have actually interacted with each other. But somehow, unfortunately, even that was not possible for me. And therefore, it is a one-way communication from me to you, and very successfully I have avoided any questions from you at the end of what I have to say. Madam Meena has asked me to speak on the self-help route for attaining sustainability in microfinance. Would federating help? Now, this is a very tricky subject. Firstly, let us try to segregate what is self-help, what is sustainability, what is microfinance, and what is federation. We will start with what is microfinance. After being in the sector for almost 35 years and being very actively involved in the creation and development and execution of the SHG bank linkage program, let me confess before you that perhaps my understanding of microfinance or microcredit is not the same as some people in various conferences organized in this country and perhaps in the rest of the world have. I would ask a very simple question. What does microfinance really mean? What does microcredit really mean? Is it all small deposits and all small loans? All small deposits and all small loans by banks, by cooperatives? When we talk about banks, does it limit itself only to the SHGs, deposits of SHGs and loans to SHGs? What about individual loan accounts? What about individual deposit accounts with the banking system, with the cooperatives? If they are of small amounts, will they be called microfinance? Will they be called microcredit? I don't think that we are all talking about microfinance and microcredit on the same wavelength. MFIs talk it very differently. They think that only when they provide loans, it is microcredit. When banks provide loans, that is not microcredit. In most of the conferences organized, whether it is by Access or Sadhan or many others, for years I had seen that small loans of banking system are not called microfinance, and this is appalling. Now in this world of financial inclusion, which has become the buzzword for all of us for the last 3 or 4 or 5 years, a lot of, for example, the no-frills accounts which are being opened. Now, will a no-frill account for savings deposits will be part of microfinance, or it is outside microfinance? If a small amount is withdrawn under a general credit card given against a no-frills account, is it microcredit or is it not microcredit? I think we first need to settle this issue, and I will leave it to you, the learned people here, the practitioners here of microfinance, to decide what exactly is microfinance, what should be covered under this and what should not be covered under this. To stretch it a little further, for example, in various conferences I have seen when MFIs give loans, it has often been argued that many of these loans are not necessarily for livelihoods. And therefore, small loans by MFIs for livelihoods have suddenly become the buzzword. A small loan given by an MFI for purchasing a cow is tom-tommed as if some great innovation has been done. It is very easily forgotten that Indian banks and cooperatives for last 40 or 50 years have been given such loans, or such small loans. So was that not microfinance, and suddenly this small loan for buying a cow by an MFI, that has become microfinance? Please decide amongst yourselves, because here bankers are there, policy makers are there, MFI practitioners are there, and so let all these experts assembled here decide what exactly is microfinance and microcredit, which you would like to really practice. Now let us talk about the self-help group program. Very honestly, this was the first bold initiative towards financial inclusion. If we go back a little before the 1991-92 circulars which were issued by the Reserve Bank and the guidelines which were issued by NABARD, in fact in NABARD we go back to 1986-1987, when we had a action research pilot project, and the very title of that project was Improving Access of the Poor to the Banking System. Now what does improving access of the poor to banking system mean? It means financial inclusion. The reason for developing the self-help group methodology was that at that point of time, more than 20 years ago, 25 years ago in fact, the rules and regulations which govern the opening of a savings account, giving a small loan or giving a loan, forget about the small loan part of it, were such that the poor people somehow were not able to use them. Today we all know that under no-frills account you can start a zero balance account. State Bank of India today has said that for all savings account you don't have to have any minimum balance. This was not so in 1987. And therefore the poor people were not able to open accounts even if they wanted to. And therefore a system had to be created where the poor people could save small amounts of money and could get small loans from the same banking system via a route which was created through the SHG. There was one more thing. SHG was not just a platform for financial transactions. That was not a platform where you just come and put in some money as your deposit, you take some money out of the SHG as loan, you come back and repay your loan. It was much beyond that. It was a large program of financial education. How much amount can you save? Can you save 10 rupees a month? Can you save 50 rupees a month? Can you save only 5 rupees a month? I'm trying to understand this limit that I will be able to save only 5 rupees. I will be able to save only 25 rupees and not beyond that, was part of financial education. It was part of that education which told the member of the SHG, do not commit yourself beyond what you will be actually able to do. Similarly for loans, SHG was supposed to be that forum where, because the resources are limited, loan priorities will be set. The members will discuss how much to take, which member should take how much, whether that member will be able to manage that loan or not, or that loan should be used for some other purpose. Quite often it used to happen that a member would say, I would like to take a loan of say 5,000 rupees to buy a cow. I am talking about 90s, not now, where a cow was perhaps available in 5,000 rupees. And the member would say, well, we don't think that you can keep this cow. You have no experience of keeping a cow. So why don't you instead perhaps keep a goat, which requires perhaps less care than what a cow requires? Now this was all part of financial education on how to take a loan, why to take a loan, for what purpose you should take loan, how much you can manage, what you cannot manage. This is all supposed to be done today by a so-called financial literacy and counseling center. I am not sure whether it will be able to do this or not. I am not here to comment on that part. What I am trying to emphasize is the self-help group was a platform for financial transactions, but was a larger platform for financial education. And at that point of time, when it was the SHG methodology was created, savings and loans, small loans for consumption, small loans for personal requirements, right from paying school fees to meeting medical expenses, small loans for supporting livelihoods to enhancing the livelihoods which were already being practiced by the household. That was our major concern. And even today in financial inclusion, savings and small loans remain the principal two products. Beyond which also we can go, we can always talk about micro insurance, we can talk about micro pension and remittances and so on. But let us not dispute the fact that small deposits and small loans remain two key issues of financial inclusion even today. And that is what we had sought to achieve way back 25 years ago through the SHG methodology. The SHG methodology, the group discussion when they were trying to prioritize loans also talked about differentiating interest rates. There were innumerable examples where for emergent medical expenses, some of the SHGs did not charge any interest or charge a very small rate of interest. And for such loans which most of the members perhaps felt should be avoided by an SHG member, although that SHG member has the capacity to repay that loan, maybe certain expenses on celebrating birthdays and marriages and such things, they even charge higher rate of interest. So interest was linked to the activity for which the loan is taken. This was part of financial education. Now, unfortunately, what has happened is that over a period of time, some of these basic principles of SHGs and SHG methodology have been given a go by. And that has also resulted in NPAs and such things. We'll come to that a little later. But one question always remains. We are talking as if SHG is something which almost automatically gets formed, or somebody creates it and gives it to the bankers on a platter. Well, this was not so. And even if this was so in the beginning, it cannot remain so for eternity. So the question is, who will form SHGs? Why would that entity, be that an individual or an NGO or somebody else, form an SHG? So who will form and why that entity should form? And in forming that SHG, in nurturing that SHG, there is a cost. So who will bear that cost? Because if that cost is not met, the SHG doesn't get formed. When you are talking about federating SHGs, first there have to be SHGs, then only you can think of federating. Whether we should federate or not, we will discuss a little later. Who will nurture the SHG beyond that first linkage of opening a savings account and getting the first loan released to the SHG? Well, SHG and bank or SHG or any financing institution is a continuous, fairly long-term relationship. It is not a relationship which should be there for eternity. We did not want that it should be for eternity, in fact. But at least beyond that first linkage, even if a loan has been given, it has to be monitored. The functioning of the SHG has to be monitored, whether they are meeting regularly or not, whether they are making their periodic deposits, whether that is fortnightly or weekly or monthly, whether that is being done regularly or not, whether the loans are getting prioritized or not, whether loans are being repaid in time by the members to the SHG in time or not. Because all this has a reflection on the borrowing capacity of the SHG to the bank or the financial institution from which it has taken a loan. So somebody has to do this job. This is time consuming, whether the branch does it or somebody else does it for you. It is an expenditure. So if the branch does it, that is an expenditure because time has to be devoted to it. One may have to travel for that. One may have to, even if there is monitoring through returns or whatever methodology, somebody has to devote some time to analyze those returns or analyze those responses, even if they come on a cell phone. Somebody has to look through them. That is time, and time means money. It's a cost. So somebody has to spend that money, some expenditure. Who is going to meet that expenditure? What has happened over a period of time, success sometimes becomes the cause for failure, and to some extent it is true for SHGs also. Over a period of time, chasing of numbers led to SHGs' success being monitored only in terms of numbers. How many thousand SHGs, how many lakh SHGs, how many crores of deposits have come, how many crores of loans have been given. And in trying to achieve those big numbers, some of the fundamental principles of the SHG were perhaps forgotten. In states like Andhra Pradesh, which today has the largest number of SHGs, and which actually was the birthplace where rating of SHGs started, very soon because of subsidized loans, the various types of subsidies that were coming from the state government, the first basic principle of giving loans according to requirements was given a go-by. The bank loan started getting equally distributed amongst members. irrespective of the requirement, irrespective of the capacity to manage, capacity to repay, the purpose for which the loan is to be used. This was the first big casualty because it was easier. It was easier for the branch manager, it was easier for the SHG, it was easier for the so-called NGO, it was easier for the government officials, distribute it equally. Now this socialism in SHG was a huge disease which came into the system. And we are all paying the price for it. From near 100% repayment rates, today NPAs in the SHG lending across the country have crossed 6%. Now, there was nothing wrong in financing SHGs. But why these NPAs have arisen? It is something like, I will give you a very crude example. In our country, there is a law that you should drive on the left-hand side of the road. But if you do not follow that law and you drive on the right-hand side of the road and meet with accident and then say that driving on the road in India is very dangerous and people get killed, well, somebody has to ask, did you follow the rules? And the same thing we should ask here, that yes, I am concerned that NPAs in SHG financing have crossed 6%. This is a great concern for me. But why has it happened? It has happened because we have willingly and voluntarily and with a lot of enthusiasm broken the fundamental rules of SHG's formation, SHG's nurturing and SHG financing. And that is one aspect on which I think all of us need to pay a lot of attention, and I will request this forum to pay a lot of attention to this aspect. How much loan should be given to an SHG? And whether continuously giving loans to SHGs is a real measure of success. Quite often we hear arguments that after the first loan, the second loan was not given, after the second loan, the third loan was not given, and so on. A month back, I was in tribal areas of Sabarkantha. Met a lot of SHGs. Some of them had received their first loan, some had received their third loan. Some were functioning for last 7 or 8 years, and after 2 or 3 years, they had not received any loan. I also met an SHG which was functioning for last 4 years and had not received any bank loan. Now, was this SHG which did not get a bank loan for last 4 years despite functioning regularly, it was meeting regularly, it was saving regularly and still did not get a bank loan, was this a success or was it a failure? Well, it was definitely a failure, because the bank failed to recognize an opportunity for a business on which the bank would have earned interest. But there were definitely these SHG, this very SHG which had not received any loan for last 4 years, and the SHG which had received loans for 3 or 4 years, and after that it did not receive any bank loan. When I asked them that, why did you not get loan? Well, they gave some answers because of the politeness that those people had. The poor people are more polite than the rich. They did not give a very clear answer. They definitely did not accuse the bankers of not really looking at them, although the fact is that the bankers actually did not look at them. But when I asked them that, okay, I'll open the safe, the branch manager was very much there, the regional manager of the bank was there. I said, I will just go and open the safe and tell you that, okay, please take as much money as you like, but it will be treated as loan, and we'll simply record in your loan ledger that so much loan has been taken. So how much will you take? And to my surprise, the member of the SHG said, well, I will not take any money because I don't need it. We don't need it. The SHG doesn't need it. Because when we started some 5 years ago or 4 years ago, we started with a deposit of 30 rupees a month. In 1 year, we made enough profits. All of incomes of all the members was improving. So we increased the monthly deposit to 50 rupees, and now we are contributing 100 rupees a month. And we have now a corpus of more than 2 lakh rupees, which we can rotate for meeting our requirements. And we don't need any more loan because we can't manage it. We don't have an opportunity to use higher loan. And therefore, we don't want it. In any case, we have to pay interest on that. So why should we take it? Believe me, one of my colleagues had received this very answer from tribal areas in Jharkhand more than 10 years ago, or something, or at least 8 years ago. He had asked the same question. He had offered the same thing, that I will open the safe, please take as much money as you like, and the tribal women in Jharkhand had simply said, what will we do with the money? Even if we produce, where will we sell? There is no market for selling more than what we are actually selling now. So we don't need more loans. Unless that infrastructure is created, unless that market is built where we can sell more, there's no point in taking more loans. And therefore, the measure of success is not how many SHGs have been given loans, how many SHGs are given more and more loans. Some of my colleagues do get concerned that the total number of SHGs who are getting bank loans is actually falling. Well, we should see in which area it is falling. If it is falling in Andhra Pradesh, I am not so much worried. But if it is falling in some other areas, I will perhaps get worried. Let us see what the SHG really requires, what the members of the SHG require, and then compare it with what is being given to them, or what is being provided to them after following all the rules and regulations. I am not saying that money should be just thrown on SHGs. That is not the intention with which we started this program. That is not the intention even today. Nobody wants to do that. Because over a period of time, all of us expected that some of the SHG members will graduate to levels where they would become individual clients of the banking system. And that is what perhaps is being attempted now under financial inclusion. As I said, today's new mantra is not SHG, today's new mantra is financial inclusion. And surprisingly and shockingly for me, SHG formation, SHG financing, deposits from SHGs is not part of the financial inclusion plan of any bank. I have attended a couple of meetings which the governor RBI convenes, and where he speaks to grassroots people, the branch people, the business correspondents, the business facilitators, the SHG members, some individual depositors, some individual borrowers of the banking system. I don't know what these meetings are called, but the governor regularly holds them. And in every single meeting, he has definitely asked about the SHG movement. And he has repeatedly said this is the fundamental core principle behind financial inclusion and should be part of financial inclusion. But you look at the financial inclusion plans of the banks, SHG is not mentioned there. I think that is one area on which we need to work on. Under the financial inclusion plan, a lot of no-frills accounts are being opened. Even if the poor did not want it, the accounts are being opened. Something which is not very good, but it is happening, and over a period of time it is expected that it will become good. The primary reason for doing that is EBT. The government wanted to transfer some of the payments that it was making to the poor people in different regions quickly, in time, the right amounts to go to the right people without leakages and at a lesser cost. So the requirement was more of the government rather than of the poor people. In the bargain, the poor people were expected to get the money in time, the right amounts without perhaps any leakages. But financial inclusion should be a little beyond just EBTs. And for making this happen, we needed business correspondents, so that the poor people in the villages who are getting these transfer payments do not have to go to bank branches which may be still far away despite the deep penetration that bank nationalization and spread of branches has achieved. We still had people who had to walk or travel some 20 kilometers, 30 kilometers to reach the nearest bank branches. So we had business correspondents. The question then arises is, who is this business correspondent? Is it an individual who is always available in the village when we need that person? Or is that business correspondent a person who comes once in a while, once in a month, once in a fortnight, on a given Tuesday for half an hour, and if I miss that person, then I have to wait for another 1 month to make my transaction because the BC is just not there? So the BC, who is that person? Whether it's an individual hired by the bank, or individual hired by a business correspondent company or organization or some Section 25 company or whatsoever, which is an offshoot of a technology service provider. Perhaps this would have worked, but what has happened is that we launched into the financial inclusion program with business correspondent of various hues and colors, with various degrees of efficiency, without proper financial education, which was part of the SHG movement. And it is here that I have a grudge that in the financial inclusion agenda, there were two acronyms which were being used, BC and BF. BF stood for Business Facilitator. Unfortunately, this business facilitator took a back seat. It should have been the front seat driver, and BC should have been the back seat passenger. Unfortunately, BC became the driver and BF became a optional passenger, quite often not in the seat in which that person should be there. Now, this business facilitator was supposed to be that link which will provide financial education, financial counseling to the people, and will also be a link to the banking system for creating business for the bank. I feel that in the financial inclusion agenda, BF should become the driver of financial inclusion and not business correspondent. And if BF has to be a driver, then we can ask the question whether that BF can be an SHG, whether that can be an entity who is promoting SHGs because they understand what is financial education, whether that can be a government entity who is also linked with the SHG movement, and therefore continue to link people with SHGs and through them to the clients, because the business facilitator understands the needs of the people and needs of the banking system much more than others, and therefore will be an efficient link to create that financial transaction which the BC can then handle. The BF can himself or herself be a BC also. But the fact of the matter is that although BCs are perhaps not functioning as efficiently as we want them to function everywhere, but the fact of the matter is that over a period of time, maybe next 2 years, 3 years, 4 years, 5 years, BCs will become functional. They will be available in the villages where they are supposed to be there. They will be available, if not 24/7, at least 6 hours every day, 8 hours every day, if not every day, at least alternate day. But one will not have to wait for another month to get to see the face of the BC. So BC will be more or less stationed in the village. There will be enough numbers. They will open accounts. They will allow small withdrawals against the loans which have been sanctioned. Now, when this agenda is taking place, where people, even the poor people, will have individual deposit accounts. These poor people will also have individual loan accounts. Then what would be the role of the SHG? Because as I said in the beginning, the SHG was created as a platform where you could have a small loan account and small deposit accounts. Now that the same members of the SHGs could have individual deposit accounts and individual loan accounts, what will be the role of the SHG? This is a question I would like to leave with the forum to discuss, to deliberate, and to come out with appropriate solutions or suggestions. Our attempt in the SHG2, which is a small modification that we have made to the SHG guidelines, the name of SHG2, was a partial answer to this question. But as I would like to emphasize, this was only a partial answer to this question, and I would like you to really dwell upon it and come up with suggestions. What would be the new role of SHGs so far as deposits and loans are concerned, when the same members of the SHGs will have their individual deposit accounts and perhaps a loan account through the GCC or KCC or whatever, operated through the business correspondent. Please also discuss how an SHG can transact its business, the financial transaction, with the business correspondent without going to the bank branch. Because why should SHG members go to the bank branch? Why they cannot transact with the BC? The technical hitch here being that we normally require at least 2 members to transact the business on behalf of the SHG, while the present methodology that is being used, the technical methodology, the ICT methodology, allows only one fingerprint or one person's thumb impression, etc., to be the authentication for transactions. So how this will be solved, whether it is required to be solved, please discuss this and give me your suggestions. Now let us come to the federation part. Before we talk about federations of SHGs, let us talk about federations of the cooperative credit system, which we all know, and at least in NABARD we understand a little better. In the cooperative credit structure, there are three levels. One is primary cooperatives at the village level, which we can say is a very, very large SHG. Our SHG is 20 members. This very large SHG can have 1,000 members also. But it is the grassroots level organization. These primary cooperatives are federated into district cooperative bank, generally district level cooperative banks, and these district level cooperative banks are then federated into a state level cooperative bank. This is the federal structure. Now, what is the role of the district central cooperative bank and the state cooperative bank? One role, financing the lower tiers, the same thing which the federations of SHGs want to do. The second role, and the more important role, I would say, is providing hand-holding support, monitoring them, nurturing them, guiding them, inspecting them, inspecting and guiding and nurturing the lower tiers. Now, when you do this work, there is a conflict of interest. Because the banking part, when you are a financing entity to the lower tier, would want you to maximize your interest margins, to maximize your income, maximize your profits. And this expenditure on hand-holding, providing guidance, nurturing them, inspecting them, this is an expenditure. So if you want to increase profit, one simple way is to reduce your expenditure. So what happens? The district cooperative bank stops guiding the primary cooperative, it stops nurturing the primary cooperative, it stops inspecting the primary cooperative, because they want to reduce expenditure, they want to increase their income, they want to increase their profit. And when that is done, the primary cooperative is rudderless, it doesn't know what to do when a problem comes, because there is nobody to guide them. And nobody to guide them because there is an expenditure which nobody wants to incur. So there is a conflict of interest between the business part of the federated structure and the financial transaction part of that. The business part of the federated structure and the development agenda or the guiding and hand-holding support that the federated structure is expected to provide. And this conflict of interest we have seen in cooperatives has killed grassroots level organizations much more than the federated structure. So the federated structure, the higher tier, becomes very strong and the roots are dying. Now, no tree can survive where the roots are dying, and therefore over a period of time we may have taken 30, 40, 50, 60 years to reach that situation, but now the middle structure is crumbling, and in a couple of cases the top level structure is crumbling, because the roots are damaged. And roots are damaged because enough care was not taken, and enough care was not taken because of the conflict of interest which I have mentioned. Now, will this same thing not happen in the federated structure of SHGs? How are we going to protect this federation from this kind of conflict? I think we need to look at this a little more seriously. Why I am mentioning this is that so far as the cooperative credit structure is concerned, two expert committees in the past 6 or 7 years have looked at this cooperative credit structure. One is the famous Vaidyanathan committee. Professor Vaidyanathan was the chairman, which was set up by the government of India, and with which also I had the fortune of being associated. And the second committee, which last year was set up by the Reserve Bank of India to have a relook at the cooperative credit structure. This entire structure, the three-tier structure which I have just mentioned, under my chairmanship. And what did these two committees give as recommendations? The major recommendation of the Vaidyanathan task force was give freedom to the entire cooperative credit structure to function the way they want to. There should be no mandated borrowing and deposit clause between the primary cooperative and the central cooperative bank. Why should the central cooperative bank be the only lender to the primary cooperatives? If a primary cooperative can take a better loan on better terms from, say, a commercial bank, why should it not be free to borrow from some other entity than a district cooperative bank? The same thing that will happen in SHG's federation. Should an SHG be free to borrow from the federation whenever it likes, or federation would become the only lending entity to the SHGs? When it becomes the only lending entity to the SHGs, all types of politics will come in, just like it came in cooperatives. Federated structures are more susceptible to political capture, social capture, power by the powerful, the rich people, than the grassroots organizations. You can't capture 1 lakh primary cooperatives, but you can capture 400 banks, 400 district cooperative banks. If you fail to capture 400 district cooperative banks, you can certainly capture 30 state cooperative banks. It becomes much more easier. Let us not fall into that trap. And therefore, let us try to distinguish between the business part and the hand-holding part. And therefore, the expert committee under my chairmanship for cooperatives has recommended, let the district cooperative bank do only the banking function. It will be a lender and depositing entity for the primary cooperatives. So far as hand-holding is concerned, please create another structure which will do only the support services, which will provide only the support services, and the primary cooperatives will pay for it. And since the primary cooperatives can borrow from anywhere, now it is up to the efficiency of the district cooperative bank whether it can compete with other lenders to the same primary cooperatives who are their members but who can also borrow from elsewhere. But for providing support services, for providing training, for providing inspection, for providing audit services or whatever the primary cooperative want, let there be another entity for which they will pay, so that there is no conflict of interest in the same organization between these two major functions which the federated structure is supposed to do. My recommendation would be that if at all you want to create federations, the federation should provide this hand-holding support, this guidance, this nurturing to the SHGs, and that will provide sustainability. Of course, somebody will have to pay for it. Either the SHGs pay for it or somebody else pays for it. Even the financing entity can pay for it, because ultimately it is the financing entity which gets the benefit of hand-holding. If the SHGs are good, you will not have NPAs. If the SHGs are good, your loan amounts will continue to increase, at least up to a point of time. And after that, these same SHG members will convert themselves into individual loans, which will be still higher in size, and therefore your income will increase. So from your income, from your profit, the banking system should provide for this hand-holding and nurturing support. In a way, this was being done earlier, somehow which has now unfortunately stopped. There was a fund called Microfinance Development Fund, MFDF, which was set up in NABARD. And who contributed to this? NABARD contributed to this, and the banking system contributed to this. In a way, this fund was a fund created by the banking system out of its own income generated from lending to rural areas, and NABARD was a trustee for this fund. NABARD was authorized to spend this fund for creation of SHGs, guidance of SHGs, nurturing SHGs, etc., on behalf of the banking system. In fact, the banking system was not directly paying for that, it was indirectly paying through NABARD, but it was the banking system which itself was paying for it. And therefore, we had good SHGs, the numbers grew, the business volumes grew, and the banks benefited from that. Unless banks learn to spend directly or indirectly through some other medium, and under the WSHG fund which has been created for certain backward areas or the left-wing extremist areas, this kind of system is being created where the entity which is promoting SHGs will be perpetually paid a small fee, a commission on the business, on the basis of business volumes, to continue to provide that support which the banking system itself is not able to provide because of perhaps lack of manpower. Today, outsourcing is the way the world works. So if the bank outsources some of its functions to a federation or to a self-help group promoting entity, that is not a wrong thing. That is the thing that should happen, and I think it should come from the profits of the banking system. So I feel that federations of SHGs will definitely provide sustainability, provided they do not want to become financing or the sole financing entities for SHGs. And if that happens, it will be a killing thing. If that doesn't happen, it will be a sustainable thing. Thank you so much for listening to me patiently. You had no option in any case, and you can't ask questions. Thank you once again. All the best to this conference, and thanks to CAB for convening this conference. Namaskar.